The reaction is that it's one of expectations. They met our expectations, all the banks passing. The real key will be how much did they give back. We anticipate many of these banks are going to give back at least 100% of earnings, in some cases and even more than earnings, because these banks are so well capitalized. And as you guys pointed out, the majority of the cash return or capital return will come in share repurchases. We expect dividend payout ratios to come in around 30 to 40% of earnings, and eventually, maybe even get north of 40% of earnings down the road.
I think the other key, Gerard, is does this move the stocks? I mean, financials had a good day today, but in general, they've underperformed. James Gorman told Wilfred he's frustrated with the valuation, that they are undervalued. I mean, of course, he would say that, but still, I mean, does this perk up the banks?
I think over time it will. Will it immediately perk them up, meaning tomorrow? It's hard to say, but I would suggest this. Our biggest banks are being turned into financial utilities, and that's not a bad definition for our largest banks. They're going to be steady returners of capital. As we've said in the past, our biggest banks will probably give back on a normalized basis anywhere from 70 to 85% of earnings every year, because the banks generate so much in earnings they can't use it all for organic growth, and therefore they got to give it back to shareholders.
Tom, what's your take on the fact that Capital One and JP Morgan had to tweak how much they were asking to return?
Well, the card business is tough for both of them. The stress test really is punitive to companies with large credit card operations. But I wouldn't make too much of it. The point is the four largest banks in this country have been among the 10 largest share repurchasers over the last year. And I think you can look for them to be among the top 10 again in terms of share repurchases.
In terms of the balance that we're likely to see, Tom, between buybacks and dividends, do you think it will continue to be tilted towards buybacks? And any of the stocks do you think should be tilting it more towards dividends based on valuations?
I do think because of still the regulatory pressure that you're going to see the biggest banks limit their payout ratios of dividend payout ratios to less than 50%. So the one number I'm looking forward to the most coming up will be how much does Bank of America raise its cash dividend? And I would anticipate probably a 33% increase from 60 to 80 cents.